Hey guys, how's it going? I'm gonna set up this room real quick and then we'll get started with this mentoring session. So let me just get this up real quick. Let's see if there's anything else I can do here. All right. All right, cool. I'm gonna send this link out to all of the members here so that everyone can join in. And then we can get started with the questions. All right. So I just sent out the link. I'll I'll give people time to join in and then we can get started. So let's see. Cool. People are making their way in. I'm gonna give it some more time for people to join since we are a little early. All right. Let's see. All right, it's 1:54 right now my time, so we're still a little early. I'm gonna give it some time for people to join in, but if you guys do have questions, feel free to drop your questions in the chat, and I'll try to get through as well. I'm gonna get through all the questions today, so I'll try to help you guys as much as possible. The more questions, the better. If you guys have any questions regarding any of the strategies, Ftmo, anything in general, I'm here to help you guys out. So let me just get this link sent out to the other groups as well. And lastly, I will connect there. All right, so looks like we're good to go for the most part. I'll give it some more time for people to join in. But you guys can start asking questions if you guys have anything specific. So I'm just gonna keep letting people into the room and then we can get started once everyone's made their way in. Hey Vincent, how's it going, bro? Hey Matt. All right, let's see. People are still making their way in, so I'll give it a little more time. I don't want to get started too early and then have people, miss specific questions because a lot of you guys do have the same questions. So I'll try to get as many people in the room first before we start going over stuff. Yeah, hopefully you guys had a good trading day today. I didn't really trade too much. I just took that 1 minute scalp this morning during the live session. Other than that, I didn't really take anything else, but just looking at the charts here, there was a lot of good entries all throughout the day. Biden was speaking this morning. I think he stopped speaking around like 8:30, sometime around here. And then a lot of people took a lot of trades on this push to the upside and the push back down to the downside over here. Looking at the retail sentiment's currently at 61%. So I did see a lot of people draw liquidity zones and make some profit as it began to come back down here. And I'll probably go over that a little later as well, because that's something that you guys definitely want to cover. But yeah, definitely. So it's 5:57 right now. It's about 3 minutes till 2. So if you guys do have questions, go ahead and drop your questions in the chat now. I'll probably start answering them around 2 o'clock. And then we'll go on with this session until we run out of questions. Let's see if Dejan's here. Dejan's the one that wanted this session. So let me make sure he's in here right now. He's not in here yet. So let me just forward this to him. Make sure that he actually shows up to the session that he requested. Oh, there he goes. Here's in the waiting room. All right, cool. So let's see, 1:57. I'll give it a few more minutes, and then once it hits 2 o'clock, we can start going over questions. See if there's anything here. Hey, what's up, Tish? Tish is asking, what's my thoughts on GJ this week? I'll take a look at that. I'll analyze it for you from scratch so that you can see, how I analyze things from top to bottom. And then I'll just show you what I think may or may not happen. I know there was a big spike for GJ this week. I did see, yeah, this big spike right here. I don't know what caused that spike, but I mean, whatever it was, it kind of messed up the charts over here. So we'll see how that goes. Let me see if I take this off. Yeah, even if I take off the K2SR, it's still kind of messy. I don't know what caused that drop there. I haven't been trading GJ at all, so I'm not sure exactly what caused that. But I mean, we'll probably have to analyze it prior to this candle here, because obviously you can see the candles are super messy just because of that spike there. So I'll go back and analyze that a little later, but let me see what other questions we have here. Rav said, are you talking? I can't hear anything if you are. Can you guys hear me? I'm not sure if it's just Rav that's having issues or if it's yeah, Rav, everyone said they can hear me. So it might be, you might just have to turn your volume up. Everyone said that my volume is good. So it just might be an issue on your side, Rav. I think you might have probably your volume muted because everyone else can hear me here. One question from Ellis is asking, can you copy trades from TradingView to Ftmo? No, you can't, not easily. You can use a third-party platform, but it's not something I recommend because, especially if you're scalping, I don't recommend using any third-party software for scalping because the moves are too quick. And if you're, if whatever program you're using doesn't copy the trade over, or say if you're already in a trade and then you want to get out of it, like you're trying to close out, it might not relay the command to the Ftmo directly fast enough for you to get out of the trade. So you'll probably run into some slippage. You might end up stuck in the trade and you won't be able to pull out. So there's ways to do it, but it's not one that I recommend, especially if you have a funded account. If you lose your funded account due to a technical issue, you're going to be upset, right? So there's you might as well just do things through the native program. It's not that difficult. We all do it here. We're all very profitable doing it. So it's not really something that I would really say is a concern. If you want to trade directly with a funding company, I think it's My Forex funds. It's like MFF. They allow you to trade directly on TradingView. They weren't a really good broker back then, so I haven't used them myself. I know a couple people in our group had issues with them in the past, so that's why I haven't really tried them out. But eventually I might try them out if they get better. So I'll keep you guys updated if that becomes the case. All right, let's see. Okay, perfect. So Rabs works now. Looks like it might be an issue with your phone. Let's see, any other questions here? So there's no other questions right now. So if you guys have any questions, go ahead and put your questions in the chat. This session is going to run for as long as we have questions. So if we run out of questions, then there's nothing for me to really be on the session for, right? So feel free to ask any question that you guys have. I'm here to help you guys out. I'm here basically to answer all the questions that you guys have, but I can't answer any questions unless you guys give any questions. So let me go over here and just analyze GJ real quick for Tish, because Tish wants me to take a look at GJ. So here's GJ. I'm going to go ahead and just delete everything off the chart first, and then I'll show you how I analyze everything from scratch. So I'll just zoom out from here. Here's a naked chart. What I'm probably going to do is I'm going to rewind before this candle right here, Tish, because this candle right here kind of messes everything up because you can't really see anything, right? It's kind of jumbled up. But if we go before this candle right here, I can draw an analysis a lot better. So here's a naked chart. The first thing I'm going to do is I'm going to turn on the K2SR indicator. The reason I do this is to identify the rejection points. So what I'm going to do first is I'm going to draw my zones on the chart. And I'll do that by drawing over the K2SR zones. So we have a zone right here. We have a zone right here. And if the zones overlap, I just create one big zone. We have another zone right here. Another zone right here. And this zone over here overlaps, so I'll just create one big zone. And lastly, we have a zone below here. With that said, I'm going to go and turn off the indicator. And you can see that we have perfectly drawn zones right here. And these zones are really important because they'll help you identify, where price is likely to reject from. So obviously, if you have these zones drawn up here, you can see if I rewind to this area, and you can see where price is like retesting these areas. These same zones have been tested. Like I literally drew these zones today, but you can see the same zone was tested back in April. It was tested back in March. It was tested over here in June, and then now it's tested here again in July up until September. So running this through right here, you can see how price respects these zones over time, right? Price comes down, gets to this lower part of the zone, rejects up, and then swings back up. So this is the reason why I draw my zones first, so I can identify where these rejection points are going to be. So obviously you can see price comes down, rejects off the zone, comes right back up, and then it just keeps bouncing around within these areas right here. So once I have my zones drawn up right there, the next thing I'm going to do is, let me just rewind before this candle again, because this candle messes everything up. Looking at this right here. So basically, once we have these zones drawn up, the next thing I'm going to do is I'm going to turn on the momentum indicator. So like first things first, once you draw your zones out here, that's when you can start adding different confluences, right? Like if you want to determine where price is going, you can turn on the momentum indicator and you can identify where momentum is likely to go, right? So like, for example, here, if you were to see the structure and you have a momentum going that direction, odds are it's probably going to push in that direction. Like for example, if I go over here, you see price break structure, you have a buy signal right there. Odds are price is probably going to continue to the upside, right? So I'm just showing you my thought process here so you can see where I'm going as we move forward to current time. Obviously, if you have this here, you'll think price will probably go up and test this area. Once it tests this area, it can either bounce off or it can break and continue up higher. So letting this run right there, you can see price goes up, rejects off this point, bounces off, comes right back, breaks above the structure, and it continues up higher, right? So this is how I determine my analysis. First, I determine where the zones are. Once I determine where the zones are, I look at the momentum. From there, I can kind of predict where price is going to go. Other confluences I can use here is I can use the trend meter. So for example, down here, this trend meter, when it's green, sorry, my MT4 keeps going on and off. I guess it's indicating there's issues with the server right now. So anyways, going back to what I was just saying, this trend meter down here will point out the direction of the trend. So when the trend meter is green, that means that the overall trend for intraday is going to be bullish. When it's red, that means it's bearish. When it's blue, that means it's neutral. So obviously you can see when it's blue right here, price kind of consolidates a bit. When it's green, it's bullish. When it's red, it's bearish, right? So these are multiple confluences. You can use the momentum and you can use the trend meter to identify where price is likely to go. If you want to use another confluence, you can also use the K2 pivots here. Basically when price is below the pivots, it's going to indicate a downtrend. If price is above the pivots, it's going to indicate an uptrend, right? So there's a lot of different things that you can add here to increase your probability of winning or increase your probability of predicting where price is going to go more accurately. So, with that said, I'm going to go ahead and just go to current time. Price is kind of messy right here because obviously, whatever happened with this candle, I don't know what happened with it, but let me see if I could just do this. It's going to be kind of hard to analyze this because of where, how the candles look. But anyways, looking at this here, you can see that price has failed to break and close past the structure. It's broken past it, but it hasn't been able to close past it. So what I anticipate right here is if price ends up closing below this area right here, you can see it's attempted like 1, 2, 3, 4, 5. This is the 6th attempt to break and close past the structure. If it closes below here, then I would anticipate price to continue dropping even further. But it would have to break and close below it. You can see obviously right here, price attempted to break below it, but it did break below it, but it failed to close below it and it just swung right back up, right? Again, right here, if this candle right here closes below it, which is going to happen in the next 3 hours and 52 minutes, because this is the 4-hour time frame. If it does close below here, odds are it's probably going to keep dropping even further because it's going to break an important structure right here that's been tested for some time now. So if we go back over here, today is September 21st, right? The last time price attempted to break structure was on August 20th. So on August 20th right here, price came down, it failed to break structure, and it failed to close below it. And look what happened. It bounced all the way back up, right? So from that point right there, like if you're to look at it from this point right here to this rejection, price shot up 355 pips. Looking at current price again right here, if price breaks below here, odds are it's going to break below it, right? If it doesn't break below it and close, it's probably going to be a double bottom, right? You have a double bottom test right here. If you have a double bottom test, odds are price is probably going to bounce back up from this point. So the key thing to look at right now in the next 4 hours is whether price closes below this point or if it fails to. If it fails to, it's probably going to bounce up from here. If it breaks below it, then it's probably going to drop from here, right? Because the last time price broke below there was over here, but it was a fake out. So price broke below, it tested it a couple times, broke below, and then it faked out. And then it shot all the way back up, right? So it's already failed to break this area twice. So right here, it shot about almost 425 pips. Again, right here, it failed to break and it shot up about 357 pips. So if it breaks below here, I'd wait for another confirmation, wait for it to, possibly close again below it the second time so that you don't get caught in this fake out like it did right here, right? The last time that it crossed below there, let's see. So actually, it's been testing it for a long time. So it's tested it yesterday. It's tested it again right here on August 20th. It's tested it again over here on July 19th. It looks like it tests it every month on the same day. So on July 20th, it tested it. August 20th, it tested it. Yeah, September 20th, it tested it. So you can see that there's a pattern here, right? It's tested on the 20th almost every month, and it's failed to break it. Let me see the other time it tested it over here. And it tested it again like on April 20th, 22nd or 23rd. So it seems like around the 20th to the 23rd, it keeps testing the same area. And it fails to break below, even again right here on March 23rd. So I don't know, you guys can see the pattern here, right? This is why it's important that you guys draw the zones here, because the zones will show you what's probably going to happen. There's a lot of fake outs that generally happen around this area. So what might happen at this point is price will either fake out again or it'll break below and continue dropping. It tested it on March 23rd. It tested it. Oh, so it initially broke above this area on March 1st. So March 1st, it broke above. March 23rd, it failed to break below, and it failed to push below, and it just rejected back to the upside. It tested it again on April 23rd, did the same thing, came here, failed to break and close, shot to the upside. Again, right here on July 20th, August 20th, and then again on September 20th. So it seems like around the 20th every month, it just comes and it tests it. So it's in a critical price point. So at this point right here, you can determine whether it's going to have a big push to the upside or it's going to have a big push to the downside. So my analysis with this is going to be a little skewed because looking at previous data, it looks like price can, technically do one thing or the other. So I probably wouldn't enter GJ. I'd probably wait for a bit, maybe wait a couple of days to see where price is going, because the last thing you want to do is enter a sell right here and then it just rejects back to the upside, right? Another fake out that like what happened previously, or it can break below, and if you try to buy right here because you think it's going to fake out again, it might just dump on you right here. So what I would probably wait for is wait for price to either swing up above here and then take the buy, or let it swing a little farther below before you take the sell. Because if you look back here, so if you waited, so say for example, you waited for this rejection, you waited for it to cross above here, and then you finally bought, you still would have locked in some pretty massive profit right there. You would have locked in, why is this thing so far out? Okay, so if you hopped in right there, you could have rode this up for like maybe 200 pips or so, 150 pips. Yeah, around 150 pips. So, it's really going to be a game of patience because for one, I don't know what happened with this spike right here. I haven't been following GJ, so I don't know what happened on the 20th. If some news was released or something like that. But I didn't see this spike for any of the other JPY pairs. So going over to let's take a look at UJ. There's no spike there, right? So same situation with UJ over here. It's been testing this lower area actually. Well, the same zone right here. It's basically around the same area right here. You can see it tested it right here on the 15th. It shot up. It tested it right here on the 16th. It shot up last month. And it's tested it here a couple times. So just looking at the other JPY pairs, I don't see that spike that happened with GJ. So honestly, I don't know what's really going to happen from that point, but I would wait and see what happens once it crosses this area. Because once it crosses this area, this will give you a better understanding as to where price is likely to go. But all I can recommend is to just be patient. So that's my analysis for GJ. I'd be patient, just wait for a confirmation. Once you get a confirmation for a sell or a buy, then I would take it. But I wouldn't just hop just into and risk it, because you might get caught on the opposite side. So other than that, let me see if there's any other questions here. Done with GJ. Let's see. Sheriff's asking how much and how to purchase indicators. If you want to sign up for K2, just go on the website, k2trades.com. Click on K2 strategies right here, and then you'll get access to the indicators in the course. And there's different price points depending on how, if you want to go for the year, if you want to go for the month. So Sheriff, if you want to look at this, I'll give you the website here on the YouTube. Let's see. There's that right there. And I'll also give you the direct link right here if, if you've already been to the website. I'll just put it down over here as well. Yeah, I can't put all the details here because the message is too long, but you can see it right there if you want to look at it. All right, so that's it with those questions right there. Let me scroll up real quick and let me see if there's anything else that I'm missing. All right, so let's go to these actual questions over here. So let me scroll up real quick and see what we've got over here. All right, the next question over here is from Matt. Matt's asking, hi people, has anyone used Ftmo swing trade that permits news, weekend, and overnight on hold trades? Just wondering how correct it is. So I haven't used it myself, Matt, so I can't really answer your question. But from the details of the account, it looks like, there's not really many restrictions. So it takes away the restrictions from trading news and holding over the weekend. The downside to it is you get a smaller account. So unless you're a swing trader, I don't think it's really necessary. Because, obviously if you're going to be scalping like how we've been doing, it just doesn't really make sense. Unless you want to open a separate account that's just for swing trades, then that would make sense. But most of us here don't really trade any swing trades anyways. So for us, for the most part, it doesn't really apply to us. But if you do want to use it, I think it's pretty accurate for the most part. You'd probably want to ask Ftmo directly if you have any specific questions regarding that. But for the most part, I think it's, that's what it's based off, right? You just get, the only difference is you get a smaller account, you get a smaller leverage, but you can hold trades longer. Question from Brian. So Brian's asking, what do you look for when you draw your liquidity zones? So great question, Brian. That's exactly what I was going to go over today because the sentiment was a little bit high. So sentiment has been around 60% all morning. So what I'm going to do here is I'm going to go over to where price currently was. Okay, so like right here, I'm just going to rewind to this area because this was like around morning when price was like pushing up pretty high. So right here, if the I'm not going to count it from this point. I'm going to go from here. So basically right here, what I'm looking for when I'm drawing the liquidity zones is I'm looking for swing lows, because if the sentiment is long, I'm looking to sell, right? Because I want to do the opposite of majority of the traders. So if I'm looking to place liquidity zones, what I'm doing at this point is I'm looking for swing lows. So price is currently up here. If you just go backwards, you can see where the swing lows are, right? So this is the swing high. This is a swing low, right? So if this is a swing low, I'm going to draw my liquidity zone right there. Again, right here, swing high, swing low, right? This is going to be the swing low. So I'm going to draw another liquidity zone right there. And you just keep going down until you get to the very bottom. So like from right here, swing low, swing high, swing low. This is too close, so I'm not going to draw two zones. It just doesn't make sense. Again, right here, swing high, swing low. Here's another swing low. So these are just liquidity zones right here. And then if you keep going, swing high, swing low, down here. And then lastly, swing high, swing low down here, right? So this is how I draw my liquidity zones. I probably don't need a swing. I could probably have this low close right there. So this is what I'm looking for. And the reason why I draw these liquidity zones right here is because if, retail traders are long, I'm looking at short. And if I'm looking at short, I'm looking for where they're placing their stop losses, right? If all the retail traders here are buying, you got to think, where are they going to put their stop loss? If they're entering a buy right here, where's their stop loss likely going to be? At the swing low, right? Because that's basically where majority of people place their stop losses. So if they enter a long position right here, their stop loss is going to be somewhere around this area, right? And if they entered a buy from right here, where do you think their stop loss is going to be? Right below this swing right here, right? So the reason why I draw these zones here is because these areas are where liquidity is sitting, aka where their stop losses are sitting, right? If their stop losses get triggered, it's going to trigger liquidity, meaning, as soon as price pulls back to here, when their stop losses get triggered, what happens? Their buys turn into sells, right? Because when they get stopped out, the trade reverses. So they're in a buy, they get to this point right here, their trade turned into a sell. What happens when it turned into a sell? It pushes price lower, right? It's called a stop loss hunt. A lot of you guys have heard of that before. So I drew areas of liquidity right here, down here, because every time price breaks these points, everyone's stop losses get triggered, right? Because the thing is, if there's a bunch of people who are buying, just think about it. If there's 61% of traders who are long, there's going to be a lot of stop losses in this area, right? Because that's just where people place their stop loss. And then, whenever price breaks these points, it just drops lower and lower until price decides until people buy the dip, and it just swings right back up, right? Because for US 30, this is a directional asset. So this asset generally moves either up or it moves down. It doesn't really go sideways for very long. It usually goes up or it goes down. So looking at this right here, I have my liquidity zones drawn, right? And the only reason I knew this is because I looked at, at this retail over here, and talking to Maddie. I don't know if Maddie's in here right now, but Maddie actually, he made like about 7,000 in profit. Here, let me see if I can get a screenshot of that. Where's my phone at? So Maddie's been messaging me on Telegram because he's been trading on his phone. And this dude, he locked in so much profit. He sent me a video. Damn. I don't know if Maddie's here right now. Let me see if he can send me a screenshot of his profits real quick. Because I showed him a couple strategies, and he applied them using these liquidity zones. So let me see this real quick. And guys, I see some people asking questions in the Telegram. If you guys want to ask questions in the Zoom, right? Because I'm not looking at the Telegram right now. Jamie, I'm not sure if you're in this right now. I don't think you're in here. So Jamie's asking, what do you mean when you say you'll get into the discount? So Jamie, I don't see your question here. I don't even see you in the Zoom. So I'll respond to your question later in the Telegram. But if you guys are in the Zoom and you guys want me to answer questions, make sure to ask your questions in the Zoom and not in the Telegram, because I'm not able to see the questions there. But let me see if I could get a hold of Maddie. Screenshot of you. All right, so I just messaged Maddie right now to send me his profits. One second, guys. I'm gonna turn on the AC. My office is like burning upstairs. I don't know why we have like a heat wave here in California, but let me just turn on my AC real quick. It's like burning up in here. Damn, 78 degrees. It's been cold all week, and then all of a sudden it got super hot. All right, let me lower this down to 70 degrees. All right, cool. All right, here. So Maddie sent me his profit. So this is Maddie right here. He took the trades right here. So he locked in about 5,374, and he was taking a bunch of trades here, not specifically off the liquidity zones alone, but he was using a scalping strategy that I was kind of going over. He has another account where he took the sells. He said 7 bands on my other account, but I don't have access to it. It's on my PC. So he'll send it to me later, but he was actually taking the sells here that I just drew. So I'll show you exactly what he took. What he did was, oh, crap, what did I do? Let me rewind this. Wait. So what he did was he waited for price to come back and close below these liquidity zones. So I'm just going to draw right here, price come down. And when price broke below the liquidity zone, he just took the sell, and then he just wrote it down even further. So Maddie, he'll send me his other profits later. These are his profits from this morning when we were trading on the live. He also took the sells, and he made about like 7,000 off that account. So this is basically what he did. He waited for price to close below here, liquidity zone. So let price close below there. And see how price closes right here? This is where he would enter a sell. He would enter a sell here, and then he would pretty much just ride it to this area right here, right? So you let it run, and eventually hit his CP, right? Again, right here, price broke below the liquidity zone, right? So that's another sell right there. Straight to TP, right? Again, right here, price broke below the liquidity zone. So right here, another sell. Right to the next zone down here. Stop loss got to be wider because the movement's wider here. So let it run down there. And then he just kept riding it down lower and lower. So again, right there, he hit that. And then obviously, you know, so on. So that's pretty much how I draw the liquidity zones. And the reason I do that is because I'm trying to trade the opposite of everyone else. If everyone's trading long, I'm going to trade short, because that's basically how the market makers move price, right? That's why a lot of retail traders lose at trading, because they all do the same thing. If you want to do, you know, the opposite of them, odds are you're probably going to do a lot better. So that's how the liquidity zones work, and that's how I draw them. Let's see if there's any other questions here as we continue on. Brian's asking, okay, so I'm done with the liquidity zones. I'm going to go on to the next question from the other Brian. Brian's asking, for our US 30 morning trade, you just draw the zones on the 10-minute only. So Brian, I'm not sure what are you referring to, because if you're referring to the snipe strategy, then yeah, because that strategy requires the zones. So I don't necessarily draw the zones for whatever reason. I don't draw the zones at all. The only time I draw it is if I'm looking for a snipe entry. So if you're using this strategy, then yeah, you're going to need to draw the zones on the 10-minute, because this strategy is applied on the 10-minute. And those are the zones that we use. We don't use zones on the 3-minute. I mean, you can if you want, but I don't personally use them. Or you can use them on the 1-minute as well. But it's not necessary for you to draw the zones. The zones are only required if you're using the strategy here. The other strategies don't require the zones. So if you're applying the daily entry over here, this doesn't require any zones. So depending on what strategy you're trying to use, it'll just depend on that specific requirement. Because on the 3-minute here, so if I turn on the requirements for the 3-minute, there's no zones that are required here, right? You're just looking for momentum. You're also looking for whether price is below or above the pivots. So those are the two main things that you're looking for. There's no zones required here. So that's why we don't draw the zones on the 3-minute. But if you do want to draw them, I mean, they're still useful, right? These zones can be used for an extra confirmation. So like if price gets close to this area here, you probably don't want to trade until it closes below it, right? So if you do have a zone right there and you're looking for a sell, you probably don't want to enter it when it's bouncing off here. But if it closes below, then, you know, it'd probably give you a better understanding as to where price is going to continue lower. So it's not necessary, but yeah, I mean, if you're applying the snipe strategy, then yeah, it's going to be required on the 10-minute. But that's the only reason why I would use these zones on that specific time frame. But I rarely draw the zones anymore. The only time I do is if I'm drawing the zones for a snipe entry. Henry's asking, are you going to start trading more Forex in the coming months? So Henry, I mean, my answer is still the same. Like the last time you asked this, I still trade Forex every day, Henry. There's no difference as to like how I'm trading it, how I'm not trading it. If you look at the market, Henry, like, you know, it's the same thing that we talked about last time. The market's just not moving, right? If the market's moving, I'll take trades here, but the market just isn't moving. If you want to see if the market's moving, you can just pull up the stuff yourself. I still trade Forex every day. If there's an entry, if there's no entry, I don't take the trades, but if there is an entry, I'll take the trades. So, you know, same thing that I said last time, Henry, it just really depends on how the market's moving. If it provides entries for me, I'll take the entry. If there's no entry, then there's just no entry, right? There's no point in forcing any trades. If you look at price here, price is still kind of just moving sideways, right? There's no real direction. You can see right here, there's some times where price is actually moving. And yeah, I'll be trading it when it's actually moving. But if it's just going back and forth, there's no reason to force any trades, right? If there's an entry there, I'll take the entry. It doesn't matter what month it is, what day it is, what year it is, right? If it's September and there's no trades, I'm not going to force any trades. If there's trades in October, then yeah, I'll trade it more. But if there's no trades, I'm not going to force any trades. So, you know, I can't predict whether I'm going to trade Forex more or not. I gotta go off the market. If the market gives me entries, I'll trade it more. If it doesn't give me entries, I'm not going to trade it. So, just keep that in mind. And this is, it goes back to like what I was mentioning in the past. Like you just have to practice it more, Henry, so that you can actually understand, right? Because then you don't have to ask questions like this, because the market's not always going to be the same. Generally, the market picks up into the fall, and that's probably why you're wondering whether I'm going to start trading it more. But there's no guarantee the market's going to move any faster in the fall or the winter. We don't know if COVID's going to, become a bigger impact in the fall or the winter, and people are just going to stop trading again like they did, last year. It just really depends. It's going to be, we really don't know. Not every year is different. It's not always going to be the same every single year. So I can't necessarily tell you a direct answer whether I'm going to start trading more Forex in the next months. Like I mentioned before, I don't do signals anymore. So I don't know if that's what you're looking for, Henry. You're not going to get like very many signals, right? Because I'm only calling signals for the trades that I actually take. I don't do signals anymore because I don't want people to just be copying trades and not understand what they're doing. I want to make sure that you actually learn this stuff and you can actually trade on your own, because copying signals can only get you so far. If you have specific Forex questions, I can answer those questions for you. But if you're looking to just copy my trades, like I mentioned in the past, this is probably not going to be the right program for you, because I'm not here to give you trades to just copy and not understand what you're doing. But I can help you with it. If you have questions about Forex, I can help you with it. But if you're just asking for specific trades, that's not something that I can help you with. Okay, so going back to the other things, let me scroll up real quick and look at the other questions. So that's it for Brian. That's it for the other Brian, and that's it for Henry right there. For Rob's asking, do you always use the 4-hour time frame to draw liquidity zones? I actually never use a 4-hour time frame to draw liquidity zones, Rob. The liquidity zones are meant for the shorter time frames when scalping, because the market sentiment right here isn't necessarily going to mean it's going to be this in this area like tomorrow, right? So if it's 61% right now, it's probably not going to be 61% tomorrow or the day after that. So the liquidity zones are meant to be used on a shorter time frame. You can use them on a higher time frame, but the thing with trading on the higher time frame is that price isn't necessarily going to follow where retail is trading in that specific area like 2 days or 3 days from now. So I actually never draw liquidity zones on the 4-hour time frame. You guys can see right here, I actually drew them on the 1 minute. So I don't know if there's like a confusion there, because these zones that I draw here, these are K2SR zones. Those are a lot different compared to the liquidity zones. So just clear up any confusion there. I actually draw them on the 1 minute and the 3 minute, sometimes on the 10 minute, but this is still kind of too high of a time frame. So for the most part, I generally trade off the 3 minute and the 1 minute here when I'm dealing with liquidity zones, because they're short-term moves. Other than that, let me see if there's anything else that I'm missing here. Delmis, his next question is, if you already have an LLC set up, do you fill out a I-9 for Ftmo, or do you just have them send your money to your business account at the bank and filter it through the bank that way? Sorry, Delmas, let me re-answer your question. Let me reread your question. I'm kind of confused with your question here. So Delmas's question is, if you already have an LLC set up, do you fill out an I-9 for Ftmo, or sorry, I think you had a misspelling there, and you just have to send, or just have them send your money to your business account at the bank and filter it? Sorry, I'm like really confused with your question. So I'm not sure what you mean by filtering it through the bank. Like, you don't have to fill an I-9 form with Ftmo, because you're actually, I don't even know what you mean by that. Let me just look that up real quick. No, you don't fill so you don't fill an I-9 because you're not an employee, right? If you're getting paid through Ftmo, you're self-employed. So that's why I didn't understand what you're referring to, because you're not an employee with Ftmo. You're a business, right? If you're a business, they're not going to treat you as an employee because you're a business, right? You're self-employed. So there's no I-9 form that you fill out. This isn't a job, right? You're not working for Ftmo. If you have a business, it's a business. You're doing contract work for them. So you're self-employed and you actually get paid as a 1099. So I think there might be some confusion there with regard to the I-9 and the 1099 because the I-9 is an employee. You're not going to be an employee with Ftmo. You're just a trader. You're just, you're basically self-employed, but they're just paying you for your services, right? You're trading for their accounts. And when you make profit, they pay you money as like a contractor. Like say, if you go get a car wash, you're paying the detailer to wash your car, right? They're not your employee. You're not like, oh, here's your I-9 and you have to fill that out. So just use that as an analogy, right? It's like if you go to, like if you want to get some remodel work done on your house or something, right? You have a contractor come over and you pay them for their service. That's how Ftmo is as well. You pay them a 1099 or you pay them through a 1099, which is self-employment. There's no I-9 form. So if you're, and your next question is, if you don't have an LLC, should you still file taxes quarterly? Delma, so I'm not sure if like, are you familiar with like how businesses work and how businesses, because you don't have to file taxes quarterly, even if you're a business. You can do it at the end of the year. I think you might be a little confused with like being an employee and being self-employed and having a business. They're like totally different things. So you don't have to file taxes quarterly. You could file taxes at the end of the year. But obviously your situation is gonna be different. I don't know if you own any other businesses or if you have any other tax liabilities or anything like that. But if the basic way of doing it is if you have an LLC or if you have any type of business, if you have an S corp, any of that stuff, Ftmo will pay you as an independent contractor. So they pay you for your services, and then you do your own taxes at the end of the year through a 1099. So I think you kind of might need to do a little more like research on like how it works. But for the most part, I think you're making it like a lot more complicated than it really is. Like if you have an LLC, you can, when you have a funded account with Ftmo, you sign a contract and you just tell them that you're trading through a business. You basically give them your business info, and then when they pay you out, you can have the money. You can have the money wired to your business bank account. From there, you start to build profit, right? At the end of the year, when you file your taxes, depending on what tax bracket you fall under, that's how you'll be taxed. But you'll be taxed as an independent contractor through a 1099. So instead of getting taxed, a capital gain rate, because if you're trading your own account personally, you'd be taxed a higher rate. But if you're running it through a business and you're getting paid as a service rather than getting paid through actual trading, you get taxed differently. So I think you should talk to an actual like tax specialist, or if you have a CPA or something like that, they can probably break it down for you because there's different ways to do it. For me, myself, I have an LLC, but it's taxed as an S corp. So I'm an employee of the company, and I get taxed differently. So, there's going to be different ways of doing it, but I think you should definitely talk to a CPA if you decide to do so. So there's a lot of different ways to do it, but there's no like one specific way. So answer to your first question is no I-9 because you're not an employee. They do pay you as a 1099. And for your second question, you don't have to file your taxes quarterly. You can do it at the end of the year. I mean, it just depends, right? If you start making a lot of money, obviously you might want to start doing it quarterly. But if you're just starting and you're making like a decent amount, then you should just do it at the end of the year. It just, it's always going to be, different depending on your situation. Because if you have different investment properties or you have different businesses, then maybe you have to file it quarterly based on your tax status. But if you're just a normal LLC or, filing as an individual, then you could just do it at the end of the year. All right, so that's it for those questions right there. Yeah, no problem, Delmas. Sorry I couldn't be like, it's kind of hard to answer your question because the thing is like my situation is like way different from yours and from everyone else. So what I do recommend is, if you do want to run it as a business, get a decent CPA or talk to like some sort of tax specialist that can actually point you in the right direction. Because I don't even know where you're located, Delmas. For me, I'm located in California. So for us, I have an LLC, and then we have an option to tax it as an S corp. So it's basically like a corp. It's an LLC, so I get legal protection, and then it's taxed as an S corp, so I get tax benefits. Those are the two main things too. A lot of people think that just because you have an LLC, you get tax benefits. LLC is just for legal protection. S corp status is what gives you tax benefits. So just oh cool. So you're from the Bay Area. So yeah, you'd probably be doing the same thing I did. So you probably start off as an LLC, and then, you know, once you start to make X amount of money, like you start making like above like, I think 75,000 gross or net, then you would want to be taxed as an S corp. So you can do it that way. Uh, and if you have any questions about that, just go to LLC University. Let me give you the website again. So you can go here to llcuniversity.com. It's a simple website. You just click your state, California, which is where we're located. And then it'll tell you exactly, you know, what to do here. It'll tell you what to do. And then from there, like once you have it all set up, you can talk, or you can just go straight to a CPA and they'll do it for you. So it just really depends on like your situation. I'm not sure what your tax situation is, but you know, obviously mine is a little more complex because I have a lot of other businesses and stuff that have to factor in. But yeah, no, exactly. Delma said, you know, the taxes and laws are crazy out here. Exactly, 100%. And that's why you should, this is why I always recommend people run it through an actual business so that you can get the tax benefits and you don't have to pay as much in taxes. And you can also expense things like your Ftmo account, right? So for example, if you're running your trading, your Ftmo trading through a business, then you can deduct your Ftmo costs, right? So say for example, in January, you started Ftmo and you did like a 200K account, and then you have to pay like 1,200 for that, right? So for example, that's going to be an expense for your business because in order for your business to make profit, you need your Ftmo account, right? So when you spend that 1,200, that's going to count as an expense. So at the end of the year, say like you fail Ftmo your first time, you do it a second time, you already paid like about like 2,000 or 3,000 in Ftmo fees, right? Say you're not doing so well like January, February, then March, April, you get really good. And then in the summer, you get really good. And then at the end of the year, you have like 100,000 in profit, right? Instead of paying taxes on that whole amount, you can deduct your expenses. Like say you paid, you know, 3,000 or 4,000 or 5,000 in Ftmo fees. Then you can deduct that. So instead of paying taxes, you basically got those Ftmo challenges for free, because instead of paying taxes, you basically just, you know, you pretty much just got it written off as an expense. So that's why it's important that you guys do that, because you know you can write off a lot of stuff. You can write off your computer, you can write off your internet, your telephone, you can write off anything really, as long as it relates to your business. Like, and then at the end of the year, when you make like 100,000 in profit, instead of paying taxes on that 100,000, you're going to pay taxes on everything after the expenses. So you get to keep a lot of the money. You're basically getting all the stuff for free, and that's how it would work. So yeah, and you can do it at any time, Delmas, but you have to do it before the end of the year in order for it to count. And like those Ftmo expenses, they can count as startup fees if like you do it later. Like say you start your LLC now, and you already spent like a bunch of money on Ftmo. Those could be your startup fees, but it's like an X amount. You can only expense so many startup fees until you start the business. So it's important that you do it as soon as possible so that you can continue to write off, you know, more things for the rest of the year. Because the thing is, you can't just like start a business in December and say, oh, I did all this stuff in January and I did all this stuff in February and I want this to count towards a business. You know, the IRS can be like, nah, you didn't have a business in January, so we're not going to count that as a deduction. So it's always it's always good that you start as soon as possible. So yeah, I think that's about it for that right there. Let me scroll up real quick and then let me go through the other question. So hopefully that answered your question right there, Delmas. I think that answered most of your stuff. I'll try to go a little more in detail as we go down. So if you have more questions about like LLC and stuff like that, just put it in the chat and then I'll come back to your question later. But I'm gonna scroll up and make sure that I don't miss any other questions here. Let's see. All right, so Dejan's asking, I'm having an issue with identifying when to enter and when not to enter scalps and how long to hold, and mainly a mental thing, because I usually try to hop in and out to avoid reversals. There was a trader on 6 a.m. on the 1 minute, a sell that had a tiny move up on, then back down, that I took a small loss on because I hopped out too soon. Again, mental. How long do you give for scalps? So Dejan, I usually use scalps pretty much, you know, I'm gonna go to that trade that you were just talking about. So you said around 6 o'clock, which was right here, right? Yeah, I'm assuming it's this one right here. Let's see. Yeah, it was around 6 a.m. So I'm assuming this was the scalp that you're looking at right here, right? At 613. So the trade that Shawn was looking at right here, he was using the 1 minute scalp. So let me just give you the requirements here. For this right here, this is the K2 30 1 minute pivot scalp strategy. So the first requirement is that you confirm a valid K2 momentum signal. So right here we have a valid sell signal, and it's valid because it's a sell signal with a red candle within it. So if it's red and red, it's valid. That's gonna be requirement number 1. Requirement number 2 is that you confirm prices below K2 pivots 3 and 4. This red line right here is K2 pivot 4. This orange line is K2 pivot 3. So with price below it, that's gonna confirm the second requirement here. So after that, you enter on the open of the falling candle. You enter right here for a short. You set your TP stop loss to 100 and 300. And from this point, you pretty much just let it run. Dijon's main question here is how long do you give for scalps? I usually give them until they hit, John. I don't cut them. I don't cut out anytime before, anytime after. The only time I'll cut out before is if we get close to a market open. So this was kind of cutting it really close, because if you took this at 613, market open was at 630 right here. You generally don't want to be in a trade around this time, because this is where volatility starts to spike up and down, right? If it gets close to this point, I'd usually close it out, right? Personally, I wouldn't have even entered this trade right here because it's just too close to market open. I would take this one over here because this is at 542. But I wouldn't have taken this one because it's just too close. I also wouldn't take this one right here because this is such a big candle. This is something that a lot of people don't realize. You know, if the candle is really big like this, it's probably going to have to retrace. So it comes down, retraces, and then you probably would have gone stopped out if you entered this trade here. So I wouldn't have entered this. I would have entered this because this is a good timing and it's a decent candle. I wouldn't have entered this one because it's too close to market open right here. But anyways, let's let it run right here. And it actually hits TP within a few minutes. I'm not sure if this is the one that you're referring to. Okay, so yeah, it is the one. So this actually, it was only in for like about 1, 2, 3, about 2 or 3 minutes. So I don't think that'd be very long. I mean, if you're holding it for more than like 10 minutes, then, you know, that's where it's kind of pushing it, right? You're like, damn, I should get out of this trade. But I think 5 minutes is fine. I don't really set a time limit on my trade. I just watch until it hits TP or stop loss, especially if it's a scalp. Because if it's a scalp, it's probably going to hit within 5 minutes or less. If not, then if you're trading during Asia session, then that might take longer because price barely moves during that time. But other than that, it usually hits like within this time period. Maybe if you hold it for like more than 30 minutes, then that's where you might want to start to worry. Like maybe like this one over here. This one over here, it took like about, let's see, this one took a bit longer. It did hit TP, but it did take longer. It took about 10 minutes. So as you can see, it usually hits before 10 minutes. I've never seen a 1 minute go longer than 10 minutes from my experience. Actually, this one over here kind of took a while too. And this is the reason why I only trade during New York session, because I want it to actually be moving. So right here is London session. You can see price took about, it's about the same time, about like 11 minutes, a little over 10 minutes, about 12 minutes maybe. Yeah, so I guess like the range that you'd probably look for is about 10 minutes to 15 minutes max. If it's anything after that, then there's something wrong with the market. Because if you're trading on the 1 minute, it should at least move 100 pips within that time period. But yeah, you know, short answer to your question is I never really give it a time limit. I just wait for it to hit. And the thing is, if I hold on to it for too long, say right here, it's already 10 minutes in, right? And then you're like, man, I'm tired of watching this. What I do is I just set a TP. So when it comes down and it hits it, I don't have to be there for it. So, you know, like you said, it was a mental, it's all mental, really. It's trade psychology. So the thing is, like with this trade here, I could see myself even getting kind of annoyed and worried about this trade. Because if I was to hold this trader here and it pulls up like that, at this point, I would have been like, screw it. I'm just going to put a TP and I'm going to walk away. Because if I was watching this, I probably would have like been super stressed out, right? I'm sure you would have too. So you're holding this for a couple of minutes. You're like, yeah, this thing isn't going to move. And then you just leave it. And if you set a TP there, you just let it go, come back in a few minutes and boom, full TP. So, you know, short answer to your question is I don't have a time limit for it, but I basically just let it run to full TP. All right. Other than that, let me see if there's anything else here. Delmus's next question was, yeah, no problem, Shawn. Glad I could help you with that. Delmus's next question is, what's your method of invoicing for invoicing Ftmo? So I do it through, I used to do it through Skrill, but I switched to wire transfer now. And they use, I forgot what company they use. Let me see what it is. I actually got a payout recently. Let's see. They use Wise. So they use Wise, which was formerly TransferWise. That's what they use for bank transfers, basically a wire transfer. That's what I use now for mine. Before I used to use Skrill, but Skrill they charge a fee now, so I don't use Skrill anymore. I just do a basic wire transfer, and they have my bank information. So whenever I get my my payout, they just they'll send me an email like, "Hey Shawn, here's your payout for this month. How much do you want to take?" And I usually just take everything out and I reset the account because I don't like leaving money on the table. So for me, I just use a wire transfer or bank transfer, whatever they want to call it. All right, let me scroll up real quick. See if there's anything else that I'm missing here. Okay. All right, next question is, so John said, for some reason, everything always looks clear to me as I'm asking for help or after the trade is already completed. Do you think I get over these testing jitters after almost 2 years? No, I mean, for some people it takes longer, John. Like for me, it took me like maybe, well, I wasn't really profitable my first 2 years. And then my third year, I was somewhat profitable because I started to trust my trades. But I wasn't like really trusting them until like maybe 4 years in. But that's because like I didn't know what I was doing the first 2 years. Once I started to figure out how the market was moving and my strategies were developed, that's when I started to trust them. You know, I think the main thing that you have to do to really trust the trade is to apply it more often. The more often that you apply it, the more TPs you hit, the more you'll trust it, right? And that's the main key with a lot of people. Main key is trade psychology, right? You just psych yourself out every time. Like whenever you take a trade, you're like, you think of the worst, right? The worst can happen. And then when you least expect it, it hits TP, but at that point, you already pulled out of the trade too early. And it's the same problem with a lot of people. You know, you're not the only one that has that issue. The only thing that I can recommend is that you just keep applying it or trade on a demo. If you're too worried to trade your own account, trade on a demo. If you take like X amount of trades a day, your confidence is going to build. You're going to start to trust the strategy more and more. And you know, once you get good, then it's going to be easier for you to just trust it once you go live. But I've seen a lot of people where they do really well on demo and then they go over to live and they get nervous again. It's like they never snapped out of it. So one thing that I've seen a lot of people do is they still trade on their demo, but they add their live account to their copier. So they're not actually trading their live account. They just trade on their demo and then it copies over to their live account. And then they do just as well. It's a mindset thing, right? Some people, they get really nervous for whatever reason. But when it's on demo, when it's not like their money, they're kind of like whatever, and they take the trade and they let it run and it actually works. So I don't know if that's something that you might want to try. John. It's not linked in the chat, but I'll give it to you right now. So. All right, Dejan. So there is the, if you guys look here in the Zoom chat, I just put it in there right now. It's so their tools, that's what I use. So if you have the same problem that Dejan has, where he just gets nervous, like off the real trade, maybe you might want to try trading on demo and then just having it copied to your actual account. That might help you a lot with getting over the fear of trading. And this works a lot better if you're already good on demo, and then you just can't do that same thing on your personal. So that might be something that you want to try out. So let me scroll up real quick and let me see what the next question is. Next question is from, let's scroll up real quick. All right, so Rob's asking, what are the strategies you shared with Maddie to trade the liquidity zones? So this is a strategy that it's a really risky strategy. So this isn't a strategy that I really ever teach anyone. It's something that I use on my own because I know how to use it, and I'm very I may follow the rules like directly. Like I don't really get greedy, and I collect profits every time. the strategy that I used, that Maddie was using yesterday, you know, both of us were using it. You know, it was kind of random how we came up with it. It was just, I was trading on my own. I was just scalping on my own. And then Maddie messaged me and he just asked me what I was doing. And I told him that I was scalping and I showed him what I was doing. That's how I locked in all these profits right here. This is a strategy that I used to use a lot, like back when I was trading riskier. When I wasn't that very conservative, I would try this. I could make like a ton of profit every single day. If you guys have been in K2 from like the past 2-3 years, you guys would used to see my accounts like this every single day. I would have like, you know, 30 trades and they're all wins for like 500 bucks each. And then they add up to like a lot at the end of the day. The reason why I stopped trading like this is because I don't want to be on my screen all day because it's very addicting. Like it's addicting because you keep winning every time, you make so much profit that you just want to keep going. You know, it's the same with Maddie. Maddie, I showed him the strategy yesterday. He made a ton of money. And then he, this morning, he was like, he didn't even want to go to the gym. He was like, I should have just stayed home and traded. You can see Maddie's profits over here, actually. So this is what I locked in yesterday. Maddie was just, you know, doing what I was doing. He did the same thing, right? So he has a bunch of wins here for like, and I told him that my goal is usually about $500 profit for each trade. And I'll show you what I'm doing here, but I'm not going to give you like a breakdown of the requirements or stuff because it's very subjective. You have to actually know what you're doing to apply the strategy. But I'll just show you a little quick rundown of to like why I apply it. So, and Rob, your other question is, what's your stop loss on liquidity zones? So when I'm trading liquidity zones, I'm generally using a 1-to-1 risk to reward. So depending on where your TP is, my stop loss is like equal distance away. But most of the time it's not even really necessary because it's going to move so fast once it hits liquidity that it'll drop really quickly. Okay, so let me just go back over here and I'll show you what I do when I scalp that way. Let me see. So I was trading this morning around, let's see, I got off the live session around 7. And then, okay, so this is where I started to take these trades because I actually took a couple trades myself after Biden was done talking. And I just kept trading. So basically the way that this strategy works is identify the previous swing highs and swing lows. So like, for example, right here, and I'm not going to give you the requirements. So anytime after this session, if you guys ask me about the strategy, I'm not going to go over the strategy. Thing is, I don't want to teach this to you guys because it's very risky. And if you guys don't follow the rules, you guys can blow your accounts really quickly. The thing with Maddie is he's really good at following directions. So he can just, you know, he knows what I'm doing. He knows the risk involved. So he's able to get in and out quickly, not to get greedy. So for this right here, basically, and this is quicker than the 1-minute scalp. So the 1-minute pivot scalps, this strategy is like even quicker than that. So you have to be really quick. You have to be able to click in and out of the trade right away. You can't get greedy at all. You have to have a profit target every time and a stop loss, you know, in mind as well. So what I do here is, for example, this is like where I started taking trades today, this morning. Basically, I identify where the previous swing high is, which is here, right? Because the swing low is right here. The swing high is right here. So there's a swing high. And here's a swing low. Or I mean, if you want to go lower, the other swing low is like down here. So I have the swing high and the swing low. Right here, we have a buy signal, right? So if you have a buy signal, momentum's going to push to the upside. What I'm looking for is for price to close above this area right here. If price closes above this area, then I'm going to take a buy. So as you can see, price goes up, slowly moves up. Right here, it's closed above, right? At this point right here, I enter a long position. And for me, like my profit target goal, like if you guys can see right here, I was taking 20 lots, which is very risky. If you don't know what you're doing. For me, I was taking 20 lots because I was only going for 50 pips. Generally, we go for 100 pips. But for this, I get in and out really quickly because I'm taking like 10, 20 trades. I'm not like holding these trades for too long. So my TP is really tight. It's like right there. Or actually, this is New York session, so I went a little higher. I went for 100 pips. So I do that there, and then it's pretty much the same as like the normal 1-minute scalp, except it's just a lot faster. So price broke structure right there. I took the trade and then I hit TP, right? That's the strategy. It's very simple, straightforward. You have to be able to pull out like really quickly. Right here, I only locked in a couple $100. I probably could have held on to it, made like a couple thousand, but I didn't because, like I mentioned, you can't be greedy taking a trade like this because this happens so quickly. And then what happens is I just do the same thing over and over again, right? So again, right here, price comes up, it comes down. So right here, I'm trying to identify another swing high. So again, right here, I'm identifying another swing high because price comes down, right? So swing low, swing high, comes back down. I'm looking for price to close above this area again. All right, so I'm waiting. Price comes back up. There's a buy signal right there. I'm looking for buys. And then it shifts. So you don't always have to look for buys. If you get a sell signal, then you're going to start looking for sells. But this didn't come down right here. So there is no sell available, right? I'm only looking for buys here. So we have another buy signal. It closes above here again. Right there. So you can see where price closes above it again right there. I do the same exact thing. I go in for a quick scalp, and I'm not going to explain this again, guys. So just a reminder, if you guys ask me about this again in the future, I'm not going to explain it to you guys. So this is the only time I'm going to explain it to you guys, because I don't want you guys to be stuck on the strategy. And while you can make a lot of profit doing this, you could also lose a lot of profit if you don't, or lose a lot of money if you don't do it properly. The problem with this is that it becomes addicting, because you could win so quickly and you make so much profit like right away that you start to go away from the rules, right? Because I'm telling you guys that you have to exit. Once you reach this TP, you have to exit. What happens is a lot of people get greedy and they want to hold on to it longer than they're supposed to. And then it ends up reversing on them and they end up blowing their accounts. So that's why I don't teach this strategy to anyone, aside from myself and certain people in some instances, if I can trust that they can do this properly. So again, right here, price comes up. I think I took this trade, but I had a wider stop loss for this one. Oh, no. So there you go. It kind of just bounced around this area and then it swung up. I remember I was talking to Maddie about this, because this is right before I left for the gym. I was like holding on to it and I was like, damn, man, I want to pull out. And I just ended up setting my TP there and it just like swung back to the top and I hit my TP right there. So again, same situation right here. This actually provided for another entry, because right here you can see, so swing up, swing down, swing up right here, and then it comes right back down, right? So at this point, there's another swing high right there. So again, right here, price broke structure, or it broke the swing high, and then you do the same thing. So right there, same situation. I don't think I stopped trading at this time, but I know Maddie kept trading, and he actually locked in a lot. He locked in like 7,000 within this small time period right here, because he took about 7 or 10 trades, and I think he took this right here as well, and then he hit TP again. So again, right there, same situation. And I think there's probably another one right here, because we have a swing low, swing high. So there's another swing high right there. Still looking for buys. And you guys can see how easy this is. So this is what I was applying yesterday. If you guys want to play around with this, go ahead and do this on your demo account. See if you can be consistent. Because the problem is, see if you have like a couple wins right here. You have 1, 2, 3 wins. At this point, your confidence is through the roof. You're like, oh, I can never lose, right? And at that point, that's when you start to lose, because you get too confident. You get too cocky with your trades and you get too greedy. You start to hold your trades for too long, and that's where things go downhill. So again, right here, another TP right there, right? So 4 back-to-back wins within how many minutes? In 30 minutes, or 28 minutes, you would have had 4 back-to-back wins right here. If you're doing 100 pips, so like for example here, you're doing a 20 lot, so it's 20 times 10, or no, sorry, 20 times 100, because you're doing 100 pips. So 20 times 100, you're making 2,000 per trade, right? 1, 2, 3, 4 wins right there, times 4, that's 8,000 in like less than 28 minutes. And this is where it becomes addicting, because you keep winning and you feel like you can't lose, but you can lose. So you have to be grounded. You have to be humble, and you have to like remember that you can still lose. So at this point, there's no swing highs. So you're done with these right here. Let's see if there's anything else here. Okay, so price comes back down. Another swing high right here, right? Price breaks above right there, and then another win. So there's 5 wins back to back right there. So you have the swing high, another long position right there. And this is how Maddie made his 7,000 this morning. So see all these buys right here, and look at Maddie's right here. See all these buys? So he made a ton of profit doing that right there. Just doing this 1, 2, 3, 4, 5. how many trades did he take? 1, 2, 3, 4, 5 right here. Probably the big ones are the ones that he took, and these are other trades that he took as well. So you can see he's taking 20 lots because he's applying that strategy. And that's what he used to make this profit right here. You know, he made about 5,000 in X amount of time. Yeah, and obviously, you know, you could keep going. I mean, if you wanted to keep going, you could swing that right there. And okay, so we have a sell signal here. This is where it shifts, right? So I'm gonna delete everything off the chart. These are all the wins right here for a buy. Right here, now we're looking for sells. So at this point, you're looking for the swing low, right? You have a swing high, swing low. This is gonna be the swing low right here. Price closes below there. And you just, you know, you do the same thing. It's the same thing in the opposite direction. And the thing with this is it moves so fast, you don't even have to look at the trend. Like you can turn off the pivots don't even matter because you're just getting in and out super quickly. Full TP again right there, right? And at this point, there's another swing low right here. This price swings low, then it swings back up. So again, right here, another one. And you guys can see how addicting this can get, right? You've already had like 7 wins back to back and you feel like you're unstoppable and you just want to keep going. There you go, another full TP there. And then, you know, obviously you can just keep riding it lower and lower. So this is the strategy that I applied yesterday. I do this every once in a while. I don't do it as often anymore. There's just some days where I just feel like scalping, like really scalping. And this is why this is the strategy that I apply. I'm not going to teach this again, guys. So if you guys want to watch this in the future, just go back to this video. But this isn't going to be a strategy that I necessarily teach to people because obviously you can see how lucrative it is, right? You can see how much profit you can make. But think about you doing this and getting greedy. You can blow your accounts like one day. So just, you know, something to keep in mind. All right. So other than that, let me scroll up real quick and see if there's anything else here that I am missing. Yeah, Rick. So Rick said this seems very intuitive to me and simple. No, exactly, Rick. The main problem with a lot of people is they don't know how to identify the swing highs and swing lows, right? For me, I was able to identify them on the fly. So I saw price swing up, I saw a swing low. I drew the line there. Swing up, swing low. Drew another line there, right? For a lot of people, it's kind of hard for them to identify these swings. So this is why I recommend that you go on demo and practice first, because identifying swings are very subjective. You know, what I see might be different for what you see. The only way to get better at identifying swings is to practice. So practice, practice, practice. The better you get at it, the easier it'll be for you to identify the proper swings, because there's like some areas right here. Like, so if you see this right here, price swings up and it swings down. This is kind of a clear swing low, but I can see a lot of people thinking that this is a swing low down here, right? Even though it's right here, because they think, oh, price came here and then it came back down. It didn't really come up and it didn't come down. It came down right here and then it came up right here and it came below right here. So one thing that you can do is you can just go and draw swing highs, swing lows. This is how you can practice. Swing low, swing high, right? Where does it swing from this point? Swing low, swing high. Where's the next swing low? Right over here. So people mistakenly put their swing low somewhere over here, which is not a big deal because it's not too far. But if you want to be very accurate, it's actually over here, because it's going to be key when you're looking for price to break and close past structure. You know, it's something that you guys just have to go and practice. And once you get better at it, it'll be a lot easier. So that's it for this right here. Let me scroll up again real quick. Yeah, Dean said this isn't for people that aren't fast. Exactly. You have to be really quick to apply stuff like this. Vincent's asking, does this thing only work if sentiment is 60% short or long? No, Vincent. This, you know, I just mentioned there's nothing else that you look at. You're just looking at where momentum is moving. So you can do this all throughout the day, but it's risky. So only do it if you understand what you're doing. Alan, there's no name for this strategy. It's not something that I'm going to teach. So Alan, because it looks like, so Alan said, hey, just saw the last part of what you're showing. What's the strategy called? There's no name for the strategy because I'm not teaching it to anybody. Whatever I taught you guys here, that's as far as I'm going to get with the strategy. This is something that I apply on my own. I mean, obviously you use the K2 indicator, so it's obviously a K2 strategy. It's just it's just something that I use like when I want to make quick profit. Like say, for example, if I'm trying to pass someone's FTMO and I got to pass it by like tomorrow, I could do this and I could pass someone's FTMO like in a day, right? This is what I could do. Before, when I used to pass people's FTMOs, like if someone was in a tight crunch and they're like, oh, I need to pass my FTMO like tomorrow, I could pass it for them because I could make a ton of profit doing this all day. Yeah, I don't do that anymore. So, and I'm not going to do it for anyone either. I don't like doing this because it's so time consuming. I have to be on my computer like all day. Like you make a ton of profit, but it's very stressful and it's very time consuming. So I don't necessarily do it anymore. I do it like whenever I want to have fun and make quick profit. Let's see, can you pass mine? Maybe in another lifetime, bro. No, but if you guys learn this, it's not that difficult. I just showed you guys exactly how it's done. Alan, if you want to rewatch this strategy, just go back and rewind it. So when this live stream is done, go back and rewind it. I went in over it in detail, Alan. So when this is done, just go back and rewind the replay to, let's see how far are we into this. Rewind the replay. Sorry, there's no timestamp on here. So if you just go back like maybe 30 minutes, I went in pretty deep detail with regard to the strategy, Alan. So if you want to go and watch it, go watch it. But it's not something that I recommend to anyone because it's too risky. It's too risky for the majority of people in K2 because people get greedy, people don't follow directions. It's not something that I really want people to be stuck on. All right, so let me scroll back up and see the other questions here. All right, let's see. So we're done with that question with Rob. Let's see, Roger's asking, can you please explain how you use previous session high lows? How much weight do you put in them when deciding whether or not to place a trade? I put pretty high emphasis on them. Roger, so let me go over here. And so the previous high lows is the K2 sessions indicator, which basically plots when the previous high lows are. So let me see if we have an entry that gets close to let's see. So like an easy way to like show you exactly where it comes into important. Let me just go to like where the market opened, because the thing is the whole day is already passed, so the zones are different. But let's see. I'm trying to see where, because I don't think it really tested it today. Today wasn't a good day where it really tested it very much. Let's see. I'm just trying to find an example where it gets close to it and it rejects like right off it. Let's see. Because it's kind of self-explanatory. It's like something that you kind of just you use and then you see when price gets near and it just rejects right off it. So I'll just rewind to this right here. So not to say that there is an entry here, but using this as an example, like just say we had a buy entry right here, right? I'm not going to take a buy entry right here because when price gets near these previous session high lows, one of two things can happen. Price will either bounce off it or price will go above it. And then if it closes above here, it'll keep pushing up, right? So there's a lot of importance that I put on these session high lows because this will save you from getting caught in a reversal. So for this trade right here, I know there's no entry, but I'm just using this as an example so that you can see, when I would take it or when it would be too risky. Like say, for example, there's like a buy signal right here, like a green candle for a 1 minute entry. At this point, I would not take this trade because look what happens next. It rejects off it and it comes all the way back down, right? And you would have gone stopped out of this trade. So the thing is, if you want to take this trade, you want to wait for it to close past it so that there's no barrier between it breaking above. That's one example. Let me see if there's another one here. So price comes back down right here. I'm trying to see when price gets like near the zones or so right here, here's another example of the opposite, right? So price is getting close to this area here. Say, for example, there's a sell signal right here, right? For a sell entry. I don't know if there is. Okay, there actually is one right here. So looking at this right here, the difference between this is that price didn't break past it. This one right here, price broke past it. And there's an entry using the 1 minute snipe or the 1 minute scalp, right? So like requirements are all met right there. Valid K2 sell signal. Price is below the pivots. With that said, there's a valid sell right there, right? If price was above this this low, the London low, I wouldn't have taken the trade. But since price broke below it, it has so much room for it to continue dropping. So if I was to see this right here, then yeah, I would take this trade and then look at the next candle straight down, because it breaks structure and it continues pushing even lower. So that's like the main reason why I would or wouldn't enter a trade, is whether price is too close to it. Because if it's too close to right here, odds are there's two things that can happen. At this point, you're just gambling, right? Because if you take a buy right here, you're pretty much hoping that it's going to break past it, but the complete opposite can happen where it rejects right off and comes right back down. It basically acts as like bumpers, bumpers for price. So here price broke below. This is the difference, because it actually broke below it. So I would have taken that trade. So hopefully that makes sense, Roger. Let me see if you saw this right here. Let's see. Yeah, so I'm not sure if you're still here, Roger, but that's the main reason, and the main way that I would use the sessions high-low indicator. It's basically just to identify how risky a trade will be, if a trade's too close to it or if it's broken past it. Let me see if it comes back around. So right here, well, this is not a valid entry, obviously, because it doesn't fit the requirements. So I wouldn't have taken that trade right there. But you can see as price comes up, it rejects off the London low and then it bounces right back down, right? So that's another reason why I wouldn't have taken a buy right there if it was a valid buy. I know it's not a valid buy, but if it was, I wouldn't have taken it. Let's see if it comes back up. Price is too far down here. Okay, so again, right here. So if I had a sell signal right here, here's another example. I mean, there's no sell signal here, but if there was a sell signal, I wouldn't have taken it because it's right here, right? If I have this right here, one of two things can happen. Price can either bounce off it, or it can break below and continue farther down. Right, so price over here bounces right back up, right? That would have been a horrible entry if you took that sell there. Even though there's no sell entry, if there was a sell entry, it would have been a horrible entry because it bounced right off it. So hopefully this this helps with your understanding as to how it works. Ellis is asking, how do you get the tags on the right? So you just go to your settings over here. You turn on settings, turn on indicator name value right there, and then you'll get the things on the side right here. So just go to settings, go to indicator name label, and then check that. So when it's unchecked, there's nothing there. But when you check it, it's right there on the right side. All right, let me scroll back up, see what else I'm missing. Let's see. All right, scrolling back down. Donovan's asking, which symbol are you using to draw the zones? I'm using the rectangle tool. So this is what I use to draw the zones. Your normal settings are like this. So if you have just the default settings, this is what your rectangle will look like. If you want to have them extend to the left or right, just double click on it or go to settings and then click extend right and extend left. And then it'll be an entire zone. That's how I draw my my zones on the chart. All right, let's see. All right, cool. Yeah, so I answered Rob's question about the SR zones. Valley's question is, what if I use my business account to pay myself a wage that makes me an employee, correct? So, Valley, it depends on like what type of business account you have. I can't remember where you're located, but for me here in California, I mean, if you just have an LLC, it's like you're not really an employee of the company. I mean, you technically can be, but you're not going to get the tax benefits, right? If you have an LLC and it's taxed as an S corp, then you can be an employee of the company, because it's like at that point it's like considered a corporation, and then it's a little different, because what you can do from that is you can pay yourself a salary, and then that salary will be an expense because you're like playing an employee. So the tax things work differently. So if you want to pay yourself and you're making a good amount in the business, I would just have your business taxes in S corp. If you're making like less than 70K a year in your business, then you probably just want to go with the LLC. Or no, actually 70K is kind of high. If you're making like less than 40K in the business, then you probably just want to do LLC. If you're doing over 40K or 50K, then you probably want to be taxed as an S corp to get the tax benefits. But like I mentioned earlier, you probably just want to consult with a CPA that actually like knows the details, because I'm not sure what your tax situation is like, and I'm not sure where you're located. All right, let me scroll up real quick and see what else I'm missing over here. Man, it's hot over here, guys. Sorry, guys, let me fix this real quick. My AC like turned off. I had to turn off. It's so hot in here. It hasn't been this hot in so long in California. It's 80 degrees in my office. All right, I just turn on my AC thermostat to 70. All right, let me see what else we got over here. Next question is from Zachary. So Zachary's asking, hi, Shawn, the trend meter only works in 2 colors. It's in 3 colors, actually. There is green, red, and blue. Green's going to be a bullish confirmation for the trend. Red's going to be a bearish confirmation of the trend, and blue's going to be neutral. So there's actually 3 colors, Zachary. I'm not sure if you have your settings different. I mean, your settings are probably different. If you're scalping, then you want to have it set to same as chart. So that's probably why yours looks different. You probably have it set to default settings. Default settings are intraday. So if you have it set to intraday, intraday is going to be 30-minute, 1 hour, 2 hour, and 4 hour. If you're looking on a 1-minute chart and you have your trend meter set to the intraday, you're probably not going to see any colors, right? Because you're on such a low time frame. If you're scalping on the 10-minute, 3-minute, or 1-minute, you want to have your settings changed to scalping settings. So right here, you just want to change all these to same as chart, and it should show what the current trend is for this specific time frame. So this is a 10-minute, 3-minute, and 1-minute. So if you're on the 1-minute and you're looking at the trend for the day, your trend's not going to match up, right? Because it's going to be different. So like if you have it set to default, damn it, I accidentally changed my default for, okay, there. So I reset it. Okay, so like this right here, you can see that it goes from blue to red to blue, right? There's no green there because you're looking at the overall trend right here. So I'm not sure if you like mess with the settings and your settings are a little different, but if you have it set to same as chart, like this, then it's going to show what the trend is on the 1-minute. So that might be one thing that you need to change on your end, Zachary. So hopefully that fixes your thing. If it doesn't fix it, let me know so I can try to troubleshoot and see what the issue is with your settings there. Another question from Zachary is, how long can I hold a trade in Ftmo? So you can hold a trade up until the weekend. You just can't trade 2 minutes before and after high impact news that's restricted. And you also can't hold over the weekend unless you have a swing account. So if you have a swing account, you can. If you don't have a swing account, then you're not going to be able to hold a trade over the weekend. But you can hold it up until Friday. You just want to make sure you close it before market closes on Friday afternoon. So another question right here. Ellis said you can write off part of your rent even if you work from home. Car paid through business account. Yeah, no, exactly. My my office here is paid off. Like basically my home here. I have a whole separate half of my home that's like just my office. So for me, I could write off like X amount. There's like a max limit to like how much you can write off if it's like within your home office, but it just depends. It's based off of square footage. So you can write off, I think, a max 1,500. So say, for example, you have an apartment and it's like 1,200 rent and you use the entire apartment as your office. You can basically live there for free because it's going to be a write-off for the entire apartment, as long as you use the entire apartment as your home office, right? So say if you have a small apartment, it's less than 1,500, that's complete write-off. Same with, with cars. Let me see if I think I had a picture of my car here that I showed you guys. Let me see if I can find the picture of it. Okay, yeah, so my car right here, this is my business vehicle, right? It says K² Trades on it. My license plate's K² Trades. I have this, blue wrap on it, Profit blue wrap. This is my business vehicle. So if you have a business vehicle, depending on your type of vehicle, this is like a Tesla Model X. This is a 100% write-off because I use it for business, right? It's for marketing. It's for, you know, when people see me driving down the street, they see this like bright blue car, the chrome blue car. They look at my license plate, oh, K2 Trades. They see K2Trades.com on the plate. What do you think the person's going to do? They're going to go and Google K2 Trades and they're going to look up K2 and join K2, right? So there's different ways to do it. You know, depending on your type of car, it can be a complete write-off or it can be partial write-off, depending on your type of car, right? Like this year or next year, I plan on getting an exotic car. So I'm probably going to get a McLaren. That's like my goal for my next car. And that's going to be, you know, used for business as well. So there's there's ways to do it. All right. So other than that, let me see if there's anything else here that I'm missing. All right, let me scroll down. So Tiana is asking, can you use Ftmo on TradingView? No, you can't. So TradingView is not supported by Ftmo yet. So keyword is yet, right? I know my Forex Funds allows you because their broker, they use like AMP and you can trade off AMP on TradingView, but for Ftmo, they don't have that luxury yet. You know, eventually they're probably going to do it. They're going to catch on eventually, but currently right now you can't. Let's see. All right, another question over here is from Funny. So Funny is asking, hi Shawn, when taking a snipe trade, does it matter if the trend is on the opposite direction? For example, if momentum is green and candle is green, but the trend is red. Funny. So let me, I'm trying to figure out what you're referring to with the snipe, because for the snipe, you don't need the trend meter. So if you're referring to the trend meter down here, the trend meter isn't a requirement, right? So you don't even need that. So it doesn't matter if it's red or green. You just need to see it. So let me delete this right here. And let me just, so I'll just look for an actual entry here, and then I'll show you what to look for. So let me see if there's any entries here. Okay, so I'll just draw this zone over here. It's kind of messy, but I'll just draw the zone right here. And let me see if okay, so this is a perfect example because this is exactly what you're asking for. And it's not necessary. So you're talking about whether the trend is red, right? So for example, here we're looking, I'm going to show you the requirements. So the first requirement is that you have a wick rejection off any K2 pivot. Right here are the K2 pivots. You can see that this wick is rejecting off the blue pivot right here, right? So requirement number one has been met. You confirm a wick rejection off any K2 pivot. Requirement number two, confirm a wick rejection off the K2SR zone. Right here we have a zone. So this wick is also rejecting off this zone. That's the first two requirements. The third requirement is to confirm that the wick rejection off the K2 pivot doesn't touch the candle body. So the pivot's up here, the body's down here. It's completely fine. First three requirements are met. The fourth requirement, you want to confirm the direction of momentum using the K2 momentum indicator. So right here we have a sell signal with a red candle within it. So this is a valid sell signal. With that said, you can enter on the open of the falling candle right here, right, for sell. So set that up right there for 500 pips. Your question here is, like, does it matter if the trend meter is green, right? We don't use the trend meter. It's not one of the requirements, so you don't even look at the trend meter at all. But even though it is green right here, if we let the trade run, it still hits TP, right? And that's why you don't look at the trend meter, because the trend meter is not required. So I think there might be some confusion there. You know, I just want to make sure that you guys understand, like, the only things that are required for each strategy are within the requirements. Just because I have the trend meter on here doesn't mean that I'm actually using it. It's just on there for an extra confluence, right? But specifically just applying the strategy, you don't need the trend meter there because you're looking for these specific requirements right here. So short answer to your question for me is no, you don't have to look at this, and it doesn't matter if it's opposite, because you're identifying the reversal right here, which happens perfectly with like little to no drawdown. Let's see if there's anything else here. So yeah, I mean, I think that I think that answers your question. Okay, yeah, no problem, Flemmy. So let me see if there's, I think you have another question here. Let me scroll down a little bit. No, I think that was it. Okay, so cool. So there goes the answer to your question there. Scrolling down, Donovan's asking, hey, Shawn, what are the steps to guide you on setting up an Ftmo? I mean, it's pretty self-explanatory, Donovan. You just go on the website and sign up. There isn't really any steps that you need. I mean, it's just if you go on the website, it literally tells you on there. So if you go to Ftmo, let me just go pull it up for you. Okay, so if you go to ftmo.com, I mean, it's right here. You just sign up for the challenge, you pass the challenge, pass the verification, you get funded. There's nothing really to it. You just sign up, they give you an account, and then you like once you actually do it, you'll know what to do. It's not difficult at all. There's no need for any step-by-step breakdown. Like you just sign up, and then that's pretty much it to set up an Ftmo. So, I mean, if you have any specific questions, like if you've done it, you're still confused, then you can ask me or ask anyone in the group. But all you do is sign up and you pass your challenge, you pass your verification, and you get funded. But there isn't really anything confusing about it. You just sign up, they give you an account, you trade it, you pass it, then they give you a funded account once you pass the verification. And that's pretty much it. Okay, so other than that, let me scroll up real quick. So that's it for that question right there, Donovan. Yeah, if you have any issues with it, just let me know and we can probably help you with it. But I don't think you should have any issues because it's pretty self-explanatory. You just sign up for it and you get an account to trade. Scroll down a little bit. John said, I could just link it to that default demo that MetaTrader gives. Yeah, you can do that, John, but I probably wouldn't do that. I'd probably use I'd use the Ftmo like trial account because the thing is pricing is going to be different for each. I mean, you could do it. Technically, you can do it, but it would be better if you're using the same broker data. So I'd probably just open a Ftmo trial account and then use that as your demo. That'd probably be your best option. Because I don't think you can use the default demo because you need to have an actual login to link it. Like it has to be an actual account. Going back to Vincent's question, so I think I answered your question for this already, Vincent. Vincent's asking, does this only work with sentiment if it's 60% short or long? So if you're using the scalping strategy that I was going over earlier, Vincent, no need for the sentiment. You could trade at any time. You're just going for the quick moves. Exactly, yes. So Rick just mentioned too, drawing those that range that I was drawing earlier for that scalp strategy. Just like he said, it just forms natural support resistance on the fly. Exactly. You just have to be quick and you have to be able to identify it really quickly. Scroll down a little bit. See what else I'm missing here. So Delmas's next question is, Delmas has said, I've been pretty good lately at hitting my daily goals, but on some days I lose a lot, then end up having to recover my losses. My question is, how do I become more consistent and not take so many L's? Is it just trade psychology or am I just over trading? For the most part, you're probably over trading. I mean, your trade psychology will depend. So for your losses, Delmas, are you losing more? Are you holding the trade for too long where you're going past a stop loss? And is that why you're losing more profit? I mean, is that why you're having such a bigger loss? If you're having such a bigger loss for that reason, then that's definitely trade psychology because you're not following the requirements properly, right? When to hit stop loss, you just have to pull out of the trade. If you're losing too much because you're just taking too many trades, then yeah, it's going to be over trading. So I mean, that's a question that you have to ask yourself, right? Why are you losing? Go back to your trades where you lose and figure out when are you losing, right? Are you losing in a different session? Are you losing like during Asia session or London session? If that's the reason, then you should just stop trading Asia and London session, right? Because that's your problem. Or if you're losing more because it's going past your stop loss and you're not closing it out, then the problem is trade psychology, right? You're not following the rules to exit when you're supposed to. You know, it just really depends. So that's something that you could probably figure out on your own. You just need to go back and see which trades did you lose, understand why you lost trades, and then you can figure out whether it's trade psychology or whether you're over trading. Because for me personally, I only trade from 6:30 to 8 most of the time. So within that time period, I make a couple wins, then I'm done for the day, right? I make a couple thousand during that time period, then I'm done for the day. I don't have any losses. I come back the next day and I do the same exact thing. Couple wins, I'm done for the day. Next day, couple wins, done for the day. By the end of the week, I have no losses, right? Because I've only taken like 1 or 2 trades a day, and they're for pretty good profit. So it adds up at the end of the week. So I mean, it just depends, right? It depends on your situation. You have to go back and just understand why you're losing a trade, and then you can figure out whether it's trade psychology or whether you're just over trading. That's the main way to figure it out. All right, so let me scroll up again real quick and see what else I'm missing. Delmas said it happens when we are on during New York. So there must be a reason why you're losing those trades, Delmas, because if you're losing and we're not losing during the live session, then you're obviously taking a trade that's not there, right? Because if the trade was there, then I would have taken it and we wouldn't have lost that trade. If you're losing and we're winning, then you might be doing something wrong, right? So I think again, like, going back to what I was saying, go back and like figure out what trade you took and figure out why I didn't take that trade, right? Because if you're taking a trade during New York session while I'm on the live session and I'm not taking it, there's probably a reason why I didn't take it. I always go through my analysis. I see every trade that comes up and I explain why I take a trade and why I don't. So you might be over trading or you might be skipping rules. Like, say, for example, if you see a 3-minute scalp and I see on the live session, I'm not going to take this session. I'm not going to take this trade because there's news or because Biden's talking or because, something is going on in the market, then there's a reason why I didn't take that trade. But if you're losing trades and we're winning trades, you might just be over trading or you might be taking trades that aren't actually there. So what I can tell you is probably just go back and review your trades. Go back and see what you lost. And then go on the live session, see if I took that trade. Did I take that loss? Odds are I probably didn't take that trade for a specific reason. So that's something to probably go over. And this is all like self-development, right? I can't help you become a better trader unless you help yourself. Like, you have to go back and you have to like really confront your losses and your problems with trading. And that's the only reason, that's the only way that you'll get better. A lot of people, they'll lose trades and they'll never learn from it, right? They'll just lose trades and then they'll just brush it off like, oh, I'm just, it was just bad luck or something like that, right? And they never confront the problem. So if you're like that, you never confront the problem, you're never going to get better, right? You got to confront the problem, you got to fix it to make sure that you don't make the same mistake in the future. So what I recommend is probably just go back and figure out, where you went wrong. Yeah, no, definitely. So Delmas said, I've been going over all my losses, so that's good. And it does help a lot. No, 100% Delmas. What I recommend is to journal your trades, right? If you lose a trade, I usually have a spreadsheet. I'll have a time when I took the trade. I'll have the asset that I traded, which is probably the US 30. And then I have a little note area right there. And I'll type in like why I took the trade. And then I'll look at what could have been done differently to avoid the loss. So that's probably, something that you can do to fix it. Let's see. So a question here from Joe. Joe's asking, what if you hit target profit before 30 days? You can pass within 10 days, Joe. So as long as you trade for 10 days, you can pass. You don't have to trade for the full 30 days. So if you do it within that time period, you can still pass within 10 days. Lisa said, can't hear you, Shawn. So, hey guys, can you guys hear me? Just want to make sure that my volume is working. Lisa just said that she can't hear me. Lisa, your volume might just be muted. Everyone here in the group said that they can hear me. So I think your computer just might be muted, or you just might have the YouTube muted. So you might want to check that. Everyone else here said that we're good. All right, thanks, Vincent. Thanks, Ray. Let me scroll back up and see if there's anything else here that I'm missing. All right, so Delmas, his next question said, how did you write the Tesla off? Did you buy it through the business or personal account and write it off through the business? I bought it through the business. You have to, well, you don't have to necessarily buy through the business, but you have to pay for the, the payments through the business, Delmas. So the reason I got the Tesla for a full write-off is because it falls under section 179. If you buy like an SUV that's over 6 tons, it's 100% write-off if you use it for business. So for me, I document all my trips. I document what I do with the vehicle. I document everything I do with the car. So I'm able to write it off completely. If you're getting like a sports car or something, you have to write it off over like, I think 5 years. So every year you can write off a portion of it. You can't write off the entire car. It just depends on on what you're writing off on for, right? So I don't know how long that law is going to be in place for. That's kind of why I bought my Tesla last year, because I didn't know, like, because it was a Trump law. So I'm not sure if, like, Biden's going to try to get rid of it. He probably will. So that's why I got that car last year. This year I was thinking about trading it in. I was thinking about getting like a Urus, because a Urus falls under the full write-off too, like a Lamborghini Urus, or a G-Wagon, basically a G63 AMG. Like those are both cars that fall under the Section 179 write-off. So, I mean, it just depends, right? If you start to make more money trading, you can like, that's a way to get a big deduction. For me personally, instead of paying taxes, I just buy a new business vehicle, right? That's what a lot of people do. That's probably why you see a lot of people. Well, no, it's not probably. It's exactly why you see a lot of people who own businesses. You'll see a lot of people who own businesses who own Lamborghini Uruses or Tesla Model X's, or big trucks like a Dodge Raptor or something, or I don't know. But you see a lot of these cars on the street, these big SUVs, right, that are expensive. I maxed out my Tesla Model X because it was a complete write-off. Same with like people who buy Uruses. They buy Uruses. The car's like 300, 400,000, but that's a complete write-off. So instead of them paying taxes, they just get a free car basically, as long as they use it for business. Same with the G-Wagon. So there's a lot of different ways to write things off, but it just depends on your situation. If you make a lot of money and you want to write stuff off, then that might be a good deduction for you. And Delmas said, just to be clear, you're buying, not leasing, right? Yeah, I bought mine. You can lease it if you want, but there's no point in leasing it. Technically you can lease it, but if you're trying to get the full write-off, you gotta buy it, because you gotta pay it all up front, right? You gotta pay for the entire car. If you're leasing it, you can write off the lease payments, but there's no point in leasing a car if you're trying to go for the deduction. So, it depends on what you're getting it for. If you're trying to get a big deduction, you're trying to get like an expensive SUV for business, then you want to buy the car, because you want to write off the entire car. Like my car is probably like 130K total, taxes and all that other stuff. And then, I got my wrap, which was expensive too. My chrome blue wrap was like 8K, I think. So that's also a write-off because it's for the business. So, it just depends on your situation. Like I mentioned, if you're not trying to get that one Section 79 write-off, then maybe you should lease it. But if you're trying to get that full write-off, you're going to have to buy it, and you're going to have not really necessarily have the cash for it, but you're going to have to pay for the car. You're not necessarily getting it for free. You're still paying for it, but it becomes a tax deduction. So at the end of the year, you don't have to pay that in taxes. But obviously it just depends on your situation. But it's a game. Like once you start making a lot of money, Delmas, like finding things to deduct and stuff like that. Once you learn the money game, it's all about the tax game, because it's not about what you make, it's about what you keep. So you can find all these loopholes and stuff like that. And I've sent the book in the group. So Delmas, I think you probably got the book in the chat over here. So if you just search up tax-free wealth, I actually gave you guys a book here that I'll teach you. Yeah. So if you just go in the premium chat, type in tax-free wealth, I gave you guys a book here, basically how to get away with, well, not really get away, like basically get away with not paying taxes legally, because there's a lot of loopholes out there that you can use. And you can download it. It's here for free. Just search tax-free wealth, click download, and then you can have the book right there. So let me see if there's anything else here that I'm missing. Scroll up real quick. Harris is asking, KT Trade, should you get an LLC first before you withdraw money from your Forex account? If you already have a Forex account, it's kind of late, because, well, depends on who you have a Forex account with, right? If you open a broker, you have to open it as a business account. So it depends on like what type of account you have, Harris. You don't necessarily have to have an LLC before you withdraw money. It's not going to help you all too much unless you you have a purpose for it. So if you're doing Ftmo, they pay you as an independent contractor, so it obviously would help you that way. But if you're just trading a personal account, it's not going to be the same thing, because you're not getting paid the same way. You still have to pay capital gains on that. It's not going to be the same as trading with Ftmo or any other funding company. So I mean, it can go either way, depending on how you're trading. If it's a personal account, it doesn't really matter. But if you're trading with Ftmo, it would make sense for you to have it before, so that you can funnel the profits through, through the business. Hugo's way, I don't really think it's going to help very much, because it's still going to count as like capital gains, because you're actually trading like your personal account. And that's why I choose to trade on Ftmo, because I'd rather be paid as a independent contractor than having the profits made from actual trading and then get taxed, the capital gains tax off that. So a lot of people don't understand this. That's why a lot of people like hate on like these funding companies, but they don't understand that there's a benefit to using them in a lot of ways, right? You're not risking your own money. And then when you get paid as an independent contractor, you get taxed as a self-employment. You don't get taxed as capital gains, because you're not actually making money from trading. They're paying you for your service to trade their account. And that's just something that a lot of people just don't get. So like whenever people hate on Ftmo or hate on funding companies, like I don't even care, because I already know how to get around things while using it, and it's beneficial to me. So yeah, Harris, for Hugo's way, I don't think it's really going to matter, because it's still going to come in the same way. Like if you have to report those profits as like trading profits. So I mean, you can if you want, but I don't think it's really going to help all that much. You probably want to talk to an actual CPA, because they probably know some loopholes to get around it. But going off like basics, it's still going to come up as like trading profit. So I don't think it's really necessary. I mean, you can write off other stuff, but realistically, I mean, it's going to be hard for you to explain, writing stuff off when it's when all you're doing is trading. I mean, you can write off your computer and stuff like that, but you don't have clients and stuff like that to use for other deductions. So I definitely would recommend that you actually talk to a CPA to determine whether, it's beneficial for you or not, unless you're doing Ftmo. All right, other questions here. Let me scroll down real quick and see what else I'm missing. All right, let me scroll up. Roger's asking, what are the key ways to identify market manipulation to avoid bad trades? I'm sure it's too broad of a question. So, I mean, there's no one way to figure out whether market's being manipulated, but there's ways to identify when it's pretty clear, right? So like this morning, Roger, I'm pretty sure you were on the live session with us, right? So this morning today at, let's see, 6:30. So I'll mark up when the market opens. So 6:30 right here, right? If you're on the session this morning, Roger, and you remembered what we were looking at. So looking at this right here, you can see how price just literally went down, right? It just literally went down like the entire day. If you look at the fundamentals here, this will just like shout, clear manipulation to you, because this was like positive, like 300 points. It was in the positive like 300 points, but price continued to come down. If you're using basic logic, if the stock market is up, you expect price to go up, right? But what happens is the stock market's up, but the chart goes down. So this is like clear manipulation. That's one way to identify it. Another way to identify it is if you see price, like if you see, there wasn't really much news this morning, but if there was news where it was like positive and then price went the opposite way and it came down, then that's obviously manipulation too, right? Because if the news is good, you'd expect price to go up, or you'd expect the value to go up. But if price is doing the opposite of where it's supposed to go, then that would indicate that there's some sort of manipulation happening. But there's not really one way to identify it. I mean, you've seen all of my live sessions. I always go over in the morning. I usually explain if market's being manipulated or not. But one of the main things to look at is going to be fundamentals, because fundamentals are always leading. If the fundamentals are all green and you see the stock market's all green, I mean, now it's not all green because the market's closed. But this morning, this was all green. This was up like 300 to 400 points. The entire stock index right here was completely green as well. The futures data was green too, but price just kept coming down, right? That just indicates clear manipulation in the market. And then what happened was over here at 8 o'clock, Biden started speaking, right? So if we go back over here, price came up initially and then it came back down, and then Biden started speaking, but the entire stock market was green. But I wasn't really paying attention to what Biden was saying, but whatever he said caused the market to dump even further. So there's different ways to look at the market, but I mean, for the most part, the main thing you should probably look at is just fundamentals. If market isn't following the direction of fundamentals, odds are, the market's probably being manipulated at that point. So that's probably the main thing. Yeah, exactly. So Roger said, feels like when price is opposite of fundamentals is the key, particularly when the difference is wide. No, 100%. Yeah. Like if everything here is completely green and the price keeps going down, that's going to indicate that, yeah, price is probably being manipulated at this point. Yeah, no problem, Roger. So let me scroll up again real quick and see if I'm missing anything else. Rav said, not sure if you saw my question. Thanks, Shawn. So let's see. Rav said, for the high-low indicator, is it better to set it in our country or leave it the way you have it set? Well, you're in the UK, Rav, so like your time difference is way different. So you should have it set to your time. The sessions high-low indicator, this is set to my time because right here I have London from 2300 hours to 700 hours, because this is like when London's actually happening. You should have these times set to the sessions that are for your, I don't know if it's the same as yours, because I know some people just change their time zone over here to mine. They just change it to Los Angeles so that it can match mine. But if you have yours set to UK time, or I'm not sure what what the time is over there. If you have it set to London, then you should probably have it changed to that specific period. So let me just go here to London real quick. I think you're London, right? UTC +1. And I'll check this right here. These aren't going to line up. So let me just see real quick. All right. So this is where the line, let me just check everything off the chart. All right. So this is currently where the lines are. I just want to see where this number is. 34625. This is UTC +1, and this is UTC. I don't think it even changes very much, right? It looks the same thing to me. So maybe you don't have to change it. I'm not in London, so I'm not sure. Like maybe if you want to like take a screenshot of my chart right here, see if your prices are the same, then it might not even matter. But for me personally, I have no idea because I don't have, I don't know if this updates if I like refresh my page or something, but I'm not sure if it even changes. If it doesn't change, then it's fine. You can just leave it as is. But, I would have it set to your specific time, like when London's actually happening. Because 2300 hours for you, like I don't even know what time is that. Let's see. If I go over here to London, 2300 hours would be right now actually. So it'd be different. But again, I'm not sure because I've never ran it on a different time frame. So something that you might want to check on your end, because I'm not sure what it looks like on your end. Yeah. So Rav, you might want to, if you want to take a screenshot of this right here and just see where my prices are and then see if it's the same as yours, then it's completely fine. You can just leave it as is. But if it's different, then you might want to change it. All right, cool. So let me scroll up real quick and see if there's anything else. Scrolling down. Madhu said, I messaged you earlier today about setting up a business for Ftmo. I heard you cover it some. Are there any more details or info about that? So, yeah, but I know we talked earlier. I'm not sure where you're located. Let me see if let me go back to our messages here. Because if you're not in California, then I don't know if I really have any details of like any of the, because I know every state's a little different. Some states, use different things, while California, I think California is like one of the most, it's the strictest state when it comes to here in Texas. All right, so I'm not sure, I've never been to Texas. I'm not sure what the tax law is out there. And I'm not even sure what kind of LLC or S corp would be best for you. Here in California, I have an LLC, but it's taxed as an S corp. I'm not sure if it works the same in Texas. I know you guys are a little more relaxed with taxes. You guys don't have to pay as much. Like, I don't even think you guys have a state income tax, right? In California, it's different. So what I would recommend is you probably want to talk to a CPA. But if you want to look at the website, you can go to LLC University. So llcuniversity.com, I'll go to Texas. I don't know if it has any details here. All right, so yeah, you guys are way cheaper. Look at your state filing fees, only 300 bucks. That's so cheap. You only pay it once too. That's crazy. So you guys only pay it once and you have 0 annual franchising fee. Like you guys have it so good out there. That's why a lot of people go to Texas and just open businesses, because it's like if they have a property out there or something like that, because your fees are so low. You know, if you go over here to California, look how much I gotta pay. I gotta pay 70 for the state fee, and I gotta pay 800 every year in franchising fee, and I gotta pay saving information every 2 years. So our costs here are a lot higher, and there's just a lot more requirements. You know, like I have to get an EIN, I have to get all this other stuff. For you guys in Texas, it's a lot simpler. You just pay a one-time fee. You don't even have to pay a yearly fee, and you're pretty much good. But if you just go here, just go to LLC University and you just type in Texas, they'll tell you exactly like what you need here. Yeah, you're probably gonna need an EIN number if you want to open a bank account, but I'm not sure exactly like what you need there, because I've never been to Texas, and I have no idea like what they're. I'm not a tax. Like, I don't know anything about taxes out there, so I can't really help you with that. But you probably want to talk to a CPA if there's anything specific. Unless you have a specific question, then I could probably give you. I could give you like more detailed. So if you have a specific tax question, I can help you with it. But I don't know anything about Texas law or Texas taxes. So you might want to go talk to a CPA or someone that you know out there that understands like what's like required out there. But for the most part, it looks like you don't even need anything. You just have to pay the state filing fee. And then maybe just provide these documents. I think everything could be done online too. But yeah, I mean, if you have any specific questions, just let me know, like regarding, like if you have something that you might need help with, like if you think something's deductible or something like that, I can probably give you like hints here and there, because I kind of know my way around things. Unless you've read this book. Did you read the book that's given in the course? If you look at this book here, everything kind of gets covered there as well, with regard to like federal tax, some California tax laws, and some Texas tax laws. But for the most part, I mean, taxes are really specific, right? If you have a specific question regarding it, I can help you with that. Otherwise, you probably would want to talk to someone that's familiar with Texas law. All right, any other questions here? Let me see. Scrolling up real quick. Let's see. All right, Rex said if you lose on Sundays, then don't trade on Sundays. Bitcoin me at Trump, Rick. Exactly, right, Rick? Let me scroll down a little bit and see what else I missed over here. Delmas said, I definitely take your trades, but because my low lot size, I won't hit daily goals, so I have to take more trades to hit the goal. I mean, you can do that, or you can, oh yeah, I mean, yeah, if that's the case, Delmas, because of your low lot size, you don't really have any options. So, but so that's where it comes into play too, Delmas. So like, what you have to do is weigh your pros and cons, right? Is it better for you to take more trades, or is it better for you to take less trades and avoid losses? Because the thing is, if you avoid losses like I do, then you don't really have any losses, and then you just keep stacking the profits, right? Because like, say for example, if you make $100 one day and then you lose 200 bucks right after, you're in the negative, right? For me, if I make $1,000 one day and then I don't trade and I keep that $1,000, the next day I make another $1,000, that's 2,000 bucks right there, right? So you got to weigh the pros and cons. Is it better for you to trade less, or is it better for you to keep trading and take that risk? You know, you just got to keep weighing the pros and cons and figure out what works best for you. No problem, Ellis. Ellis said, thank you for your time, Shawn. Definitely. DeJohn said, I'm going to go ahead and log off. Thanks for having this. I'm going to test out the demo challenge link later tonight when I do my midnight scalps. Yeah, definitely, DeJohn. I'll talk to you later. Let me see any other questions here. Donovan's asking, hey, Shawn, what is the VAT number? VAT doesn't apply to you, Donovan. VAT is a tax in the UK. So I'm pretty sure you're located in the US, right, Donovan? So the VAT number doesn't fall under, like you don't have a VAT number. Your EIN is going to be different. We do have an EIN, but we don't have a VAT. Let's see. Delmas said, thanks for everything today, Shawn. It really helped me a lot. No, definitely, Delmas. And I'm glad I could help you with that. You know, I know you had a lot of specific tax questions that, you know, I couldn't answer in the beginning, but once you have the LLC set up and all that stuff, I'd probably just go over LLC University and then probably meet with a CPA in your area. You can probably find a cheap one just to go over stuff and answer your questions, just to make sure that you're doing everything properly. And Rav say send me a message on Telegram. Let me check real quick, Rav. All right, so Rav said, I can't really see it over here, Rav, so I'm not sure what your numbers are. What I would recommend you do is just look to see if your numbers match up with mine right here, because I can't really see which number is which over here, because you have a lot of numbers over here, but none of them really line up with, and they're all like different colors, right? You got to clean up your chart so that you can see, like, can you see how mine is right here, Rav? It's pretty clear, right? It just says K2 sessions, K2 sessions. All these numbers right here are just for the sessions indicator. For yours right here, you have too many things on your chart. You have like markups, you have a lot of different things, because I know these numbers right here aren't the K2 sessions. Yeah, no, this isn't the number right here, Rav. The number right here, I'm talking about the price, because you just want to make sure that your price is the same as mine. So right here, I have 34,625. It doesn't even show up on yours here because you have too many things on your chart. You probably have to close everything else, because these numbers right here are something else. See how you have this long and short indicator right here? This red and green box, that's what this red and green number is right here. This isn't the sessions number. So what you need to do is just take a screenshot of mine right here and see if your numbers right here line up with mine's. If your numbers here line up, then it's fine. Rather than asking how do you close it, you just have to close. You gotta click on everything and close it. So click on your drop down menu right here and close everything. Close all of your indicators except the high-low indicator, and close all of these markups here. Just click the trash button and take everything off. So you just got to turn off all your indicators. Turn off all the indicators except for your sessions indicator, and then it should come up here on the side. So I think what would work best for you is if you just take a screenshot of mine and then make sure that it lines up with yours, because that's all you're looking for. You're just making sure that the numbers line up. If the numbers don't line up, then obviously something needs to be changed. But if they do line up, then you're completely fine. Yeah, no problem. Dumbest city, I just try not to get ripped off by the government once I start really running it up. No, 100% dumbest. That's how the rich people stay rich, right? Yeah, that's what a lot of people say. The rich stay rich because they already got the money game down. They got the tax game down. From there, they're building generational wealth for like them and their family. So yeah, I mean, the main key here is for you to, get this stuff down, but you're going to get there, bro. I know for sure you're going to get it done because you've been pretty consistent with your trades, and, just like everyone else here, you guys are definitely getting the money game down. The next thing to do is just to get the tax game down. So that's what most of my time consists of too. Like most of the time I'm just looking for tax loopholes for my trading, because now that I'm doing a lot better with my trading and I'm, very consistent every day, it's just really about keeping that money at the end of the year. All right, guys, let me see if there's anything else here. I think that's it for the questions. Let me see if there's anything that I'm missing over here. Jamie's asking, what do you mean when you get a discount? Getting in the trade here. So basically, Jamie's asking, what do I mean about getting in at a discount? It just means getting into trade later when it's pulling back into drawdown so that you get in for a better positioning. Other than that, let me see. Oh, Zachary's right here as well. So it looks like Zachary's all right. And Paul over here too. So Paul said, here's morning's profit. So Paul this morning locked in 7,198. Crazy profits today, Paul. And if you guys have more profits to send over, go ahead and send them over. I'll send them to the group shortly. But other than that, I think that's it for the questions here. So if you guys have more questions, feel free to reach out on Telegram or email. Otherwise, I'll catch you guys here for the next live session tomorrow morning. But for now, I'm going to take a break, and then I'm going to look for some possible trades at 6 p.m. for Forex. I don't think I'm going to see anything as the market is kind of slow. But if I do, I'll definitely call the trades. So other than that,